Assalamualaikum warahmatullahi wabarakatuh. I'm your HAZIQAH BINTI Muhammad ZAKI. Welcome to our investment analysis presentation. Today, we will compare two companies, which is Dutch ready-made industry berhad and spritzer berhad. To the right, Syahidah will explain about spritzer berhad, and to the left, Afifah, and NURIN will explain about Dutch ready-made industry berhad. In this meeting, we will compare financial ratio analysis for each company. Financial ratio analysis is classified into 5. First, liquidity. Liquidity shows a firm's ability to meet its short-term financial obligation. Second, efficiency. Efficiency measures how effectively a firm is managing its asset and generating sales. Third, leverage. Leverage measures the level of debt or borrowing in a firm. Fourth, profitability. Profitability measures how effective the firm uses its asset to make a profit. Lastly, market ratio. It measures the investor perception and judgment towards the firm's growth potential. So first, let's hear about spritzer company.
I am pleased to introduce you to spritzer berhad. Let's start by highlighting the areas where spritzer perform well. Although it may not match up with Dutch lady in some aspects, which Afifah and I will discuss later, spritzer excels in liquidity, with a high current ratio indicating a strong ability to meet its short-term obligation. This means that spritzer can comfortably cover its current liabilities, providing a solid cushion against any short-term financial challenge. However, spritzer berhad face challenge in leverage, profitability, market ratio, and efficiency. The company has high debt to equity and debt ratio, which indicate a heavy reliance on borrowed funds and increased financial risk. To address this, spritzer should manage its debt more effectively by regularly monitoring it and refinancing to secure better interest rate. In terms of profitability, low return on asset and return on equity suggest that the company isn't using its resources efficiently to generate profit. Improving the collection process for accounts receivable and optimizing payment terms with suppliers can enhance cash flow and overall profitability. Additionally, efficient inventory management practices can help minimize carrying costs and maximize turnover. Spritzer low price to earning ratio indicate that the market has less confidence in the company's future earning growth. To improve this, spritzer should focus on boosting sales, which will increase earnings per share and ultimately market confidence. Finally, the company's low fixed asset turnover and total asset turnover ratios show that it isn't making the most of its resources. Implementing better inventory control system and holding clearance sale to move excess stock can improve asset utilization. By addressing this challenge, spritzer berhad can enhance its financial performance and better compete in the market.
Let's hear about Dutch ready-made industry company.
To survive in the long term in the industry and still relevant, Dutch ready-made industry berhad have made sure company to be more efficient in turning the assets into sales. The inventory turnover ratio (ITR) shows that this company is close to the good ITR for most industries. For most sectors, a desirable inventory turnover ratio is between 5 and 10. Meaning that the firm should sell and replenish its product every 1 to 2 months. This ratio finds a reasonable medium ground between keeping just enough inventory on hand and avoiding needless reordering. Other than that, Dutch Lady also relies less on debt financing, making it less risky in case of financial difficulties. The company is more resilient to unanticipated financial difficulties or economic downturns. The business is better able to handle financial difficulties since it has less debt to pay off. There is less chance of a loan default since the company depends less on borrowed money.
By doing this, the business improves its creditworthiness and has access to future funding at lower interest rate. Lady finances its operations with more equity and less debt, making it less leveraged. With less debt to repay, the company is less vulnerable to economic downturns or cash flow issues. It has more financial flexibility to handle unexpected challenges without defaulting on loans.
Lady has a higher profitability than spritzer. This is because Lady has a greater return on equity and return on asset than spritzer. This is due to the fact that bigger profit margins are produced when return on equity and return on asset have high values. Therefore, Lady is more profitable than spritzer due to its return on equity and return on asset. The fact that Lady operates more efficiently than spritzer is one of the reasons behind its better profitability. Due to Lady's effective cost control and increased profitability, both have been made possible by its efficient operations. Strong brand loyalty comes next. Because of strong brand presence encourages repeat business and customer preferences over competitors, Lady's developed brand equity enables it to charge higher pricing and maintain customer loyalty. The market ratio of the Lady is higher than spritzer due to the fact that Lady seems to be more attractive and is giving dividends to shareholders at a higher rate. Its high profits per share suggests that Lady makes more money per share of stock. Lady pays out a bigger percentage of its profits as dividends, as seen by its higher dividend payout ratio. Because Lady has greater key ratios than spritzer, it has a larger market ratio. Investor confidence is one of the variables that contribute to Lady's greater market ratio than spritzer. Income-focused investors are drawn to dividend payments that are steady and dependable. Due to Lady's appealing dividend payout ratio, investors who want consistent income are drawn to this option. Positive market mood comes next. Positive market statement and favorable analyst ratings have the potential to increase a stock's price. The advice of analysts frequently affects investors' behavior, which raises better market ratios.
Like spritzer, we have noticed challenges with our liquidity, particularly our lower current and quick ratios, indicating potential difficulties in paying short-term liabilities. To address this, we could promote cash sales and offer discounts to resolve cash flow issue and improve our collections process to convert accounts receivable to cash more quickly. We are also proud to say our company performs better than spritzer in many areas, needing only significant improvements in liquidity. While there are other issues in various ratios, we are confident in our ability to manage them and strive to become a more efficient company in the future. By addressing our liquidity concerns and implementing strategic improvements, we can ensure our long-term financial health and continue to excel. Before we suggest to you our financial suggestion, we'll discuss the growth potential and future returns between both of these companies. Lady can grow and generate future returns through strong efficiency, profitability, and market ratios. Their efficient asset management, close to ideal inventory turnover, and strict credit policy ensure long-term sustainability and consistent profits. By optimizing supplier relationships and strengthening market position, Lady can maintain premium pricing and customer loyalty. Although they rely less on debt, considering strategic debt options can help fund expansion while maintaining financial stability. Spritzer Berhad excels in liquidity with high current and quick ratios, indicating a strong ability to meet short-term obligations and reduce financial risk. As Malaysia's top bottled water brand, Spritzer has a loyal customer base and significant market share. Investment in sustainability and expanding into enhanced water product and functional beverage can attract new customers and boost sales. Strong liquidity supports consistent dividend payouts, appealing to income-focused investors. However, their cautious approach to leverage may miss opportunities for growth through debt financing. In conclusion, both Lady Milk Industries Berhad and Spritzer Berhad
have distinct strengths and areas for improvement, with Dash Lady excelling in efficiency and profitability, and Spritzer leading in liquidity, each offering unique opportunities and growth and future returns.
It is proven from a thorough analysis that Dash Lending Industry Berhad is a stronger and more desirable investment choice than Spritzer Berhad. It is in line with the goals of long-term financial growth and maximizing shareholder value, and it is promised increased return and efficient asset utilization. All of these elements point to Dash Lending desirable option for investors looking to add consistency and long-term value to their investment portfolio. Thank you for joining us in this analysis. We look forward for your continued interest and success in investment decision. Thank you.